In this video, I'm going to teach you about ICT daily bias. I'm going to explain it in easy words and as fast as possible, so you don't have to sit here on this video and just, get confused. So I have these 5 simple rules to identify my daily bias. So the rule number 1 is we need to identify recent liquidity sweep. So you look at the chart and identify where was the recent liquidity sweep. So as you can see, we have the significant lower high here, and price just took out this liquidity, right? There would be stop orders here, and price just swept this level. So now we have liquidity sweep, right? I'm gonna put it at top. Now the rule number 2 is you want to identify resting liquidity in opposite direction. So the buy side liquidity was taken out. Now you want to identify sell side liquidity, right? So we have sell side liquidity here. Then we have this low here, which is significant, right? And then we have this level here, and we also have this level here as well. So now that we have marked out our resting liquidity, so I'm going to mark them out really quick. RL by R, resting liquidity, right? RL, RL, RL. So these are our resting liquidity levels, and right now at the moment we can anticipate, we can say that price, now that I have taken the buy side liquidity, which is here, it can go down and take out sell side liquidity. But the rule number 3 is you want to mark out fair value gap plus auto blocks near current price. So the current price is here, so you want to look below this level. So you can see we have fair value gap here, right? G, and then we have fair value gap around here, right? And we also have fair value gap around this level, as you can see. So we got like 3 fair value gaps below our price. And if we look at here, you can see that currently we are reacting off this auto block here, this green candle, this auto block here. So I'm going to mark this out, OB, right? There you go. So we have this auto block here. And as you can see, price is currently reacting off this level here as well. And then we have this tiny little fair value gap here, right? And we also got a fair value gap here. It's always nice to mark these things out, guys, because it's going to help you. All right, so I cannot put them there. So now that you have identified fair value gaps and auto blocks near current price, you want to identify premium and discount zone. So just for the sake of the chart to look clear, I'm going to remove these fair value gaps here, just so it looks clear and tidy. So you want to identify premium and discount zone, right? So you can see this bullish move, right? This bullish move right here. You want to use our Fibonacci from the low of this move to the high of this move, right? And you want to mark out the equilibrium, right? The 0.5 level is your equilibrium, and you want to mark this out by drawing your line like this, or you can keep your Fibonacci open, doesn't matter. So now that you have your equilibrium level, sorry guys, it's hard for me to pronounce that because of my native language. I'm gonna mark this out by EQ, okay? So anything below the 0.5 level or EQ is considered to be in a discounted zone, right? And anything above EQ or 0.5 level of Fibonacci is considered to be in a premium zone. So we should be taking long positions whenever price is below the equilibrium, EQ, right? Because when price is below the EQ, it is considered to be in a discounted zone. And when price is in the premium zone, it is considered to be, expensive, and you should not be taking longs in this area. And this one optional, this one is optional, overall market structure. So you can see that we have been bearish for quite some time now, and right now I see a market structure shift happening here. But for me, this is liquidity sweep and market structure shift as well. But the thing is, these don't matter, because for me, this is liquidity sweep, as you can see, and price moves in a certain, order flow. It's going to sweep liquidity. It's going to sweep buy side liquidity, and then it's going to sweep the sell side liquidity. So me, I'm overall in a long term bullish right now at the moment, because we had a market structure shift here, but we want to go down below the 0.5 level or EQ in order for us to be taking long positions. So you might ask me, how do we use this daily bias? By using all of these rules together, right? So the overall market structure, we know we have broken some structure here, so we are bearish or bullish at the moment on a daily time frame. But on a shorter time frame, you can see that we have swept liquidity, right? And there's fair value gap here, there's fair value gap here, and then there's fair value gap here. So I'm going to ask you a question: which fair value gap is has more significance out of all of these three? This one. Why? Because it is below the EQ level, and this is in the discounted zone. So what I am anticipating now, that since the price has swept this liquidity level, price is going back and sweeping out this liquidity and potentially going back into this fair value gap, filling it, and then you use any of my trading patterns that I teach on YouTube and in my mentorship. You can use any of those trading strategies when price comes back here, and then you can look for longs. However, right now, since the price has swept the liquidity, you can look for patterns that tell you to go short. And for me, I am bearish till this liquidity level is swept, right? But it doesn't matter that you are going to be right 100% of the time. Price can simply just go up from here. It doesn't really matter. But the thing is, we are following our rules, and by following the rules, you can increase your win rate significantly. So I'm going to repeat these rules. You first of all identify recent liquidity sweep. We had this liquidity sweep around here. Then you want to identify resting liquidity in opposite direction. So we have this low. Any significant low, equal highs, equal lows are considered to be liquidity levels. Then you mark out fair value gaps and order blocks. So you have your fair value gap here, here, and here. We also had some fair value gaps here, but I just removed them because I wanted this chart to look clean. And then we identify premium and discount zones. So you can see that we marked out the Fibonacci from the low of this move to the high of this move. And then we marked out the 0.5 level of Fibonacci, which is considered to be EQ. So if I drag this EQ along, you can see the price has been reacting off this level, right? So whenever price went below it, you can see that it had it touched and it had a reaction, right? So it went back up, it had a reaction here, it came back down, it had a reaction here, right? And it went back up. It didn't have any direction, but you can see how this EQ plays a huge part. So I hope this is clear. And fifth rule is overall market structure. You look for market structure, and it's gonna be a plus point for you, but it's not really necessary. All you need to look for is a recent liquidity sweep, identifying resting liquidity in opposite direction, and you mark out fair value gaps. And then you simply, look for premium and discount zones. So if price is below the equilibrium or 0.5 level or discounted zone, well, if price is in a discounted zone, you only look for longs. And if price is in a premium zone, you can look for, shorts. So I really hope this clears up your, it really clears up how you can look for, your daily bias, how you can identify daily bias, how you can, So these 5 simple rules, I would say 4 simple rules is gonna help you tremendously. You just look for liquidity sweeps, right? So you have, let's say you have buy side liquidity, right? And you have sell side liquidity. So if price sweeps out the sell side liquidity first, right? Then you can anticipate that price is going to take out the buy side liquidity here, right? And that's really about it, guys. You don't need to overcomplicate it. And please note that you're not going to be right 100% of the time. You're going to be right only 40 to 50% of the time. And you will have to miss out some setups, even if the trade works out, but your daily bias is saying bearish. You're gonna miss out on some trades. But the thing is, if you want to be overall profitable, you should add daily bias into your trading. So I hope this helped you guys a bit. You can see that I marked this auto block here. Price is reacting off this level. So for me, right now price is bearish because price needs to come back and take out these liquidity levels and fill in this fair value gap. But let's say if price breaks this level right around here, then what I can do is I can look for these fair value gaps here and look for a reaction from these levels, and then I can this level right here would become our resting liquidity, right? So right here, this is a liquidity level here as well. So let me mark this out. Resting liquidity, right? I want to put it at the top. Oh wow, I didn't mean to put it there. This right here, resting liquidity. And my God, sorry guys. Okay, so if price, doesn't want to go down and it goes back up and fills in this fair value gap right here, or this one, then if price goes here into this fair value gap, then I can anticipate that price is now going back and taking out this significant low. It is not that significant on the daily time frame, but it is actually really significant on a smaller time frames. So this is how you actually look for your daily bias. But the thing is, if price want to go up, it can take out this level, right? So price can go back and simply take out these equal highs. They're not equal, but they're relatively equal, right? And it can take out this liquidity level, and then it can take out the opposite liquidity level. So the thing is, you're not going to be right 100% of the time. You're only working with probabilities here, and that's about it, guys. So I hope this was clear, and you only take your entries. Let's say price comes back into this fair value gap, right? Then you will be looking for my trading patterns that I teach in my course and on YouTube. And right now you can short Euro USD according to me. So if you did like this video, make sure to subscribe, and I'll see you guys in the next video.